Hey all, welcome to Bro Billionaire. This is Raghav, and I wish you all a very happy Ram Navami. And on this occasion, I'm going to bring you a kind of complete trading system. This is a system, it's not a strategy. You need to understand the difference between strategy and the system. With this system, you will be able to identify which side market is moving. And please note that in Bro Billionaire, especially videos by me, there are a complete set of courses. There is a 2-hour course on price action, completely covering the pivot. But most of the times, as a YouTube viewers, you might be looking for different flavors which will never work in the long run. You have to stick to one particular trading strategy and keep using it. And if you don't know how much I have made in last 3 days, I made around 50K. I have shared my profit videos on our channel. However, if the trading psychology was good, that 50K could have become 1.5 lakh with a capital of approximately 75K. I'm not joking. There are people who are making a lot of money, and I am successful. I'm a scalper and I'm a part-time trader. However, our motto is to help all the new traders to learn and trade on their own. This is not a quick fix. So you have to be patient and watch the video till the end. And this is the third video in the series of CPR trading. Now in this, I am going to explain how you can plan your trades accordingly. In the previous video, there were several strategies I discussed, from scalping and the reversal. So if you have not watched, please do watch, share, subscribe, and encourage. Now, without wasting time, let's go ahead. So what is the things we need on the chart? So all we need is, first we need pivots, which is very important. If you go to CPR by KGS, this is freely available. I want daily pivots, and then I want monthly, weekly, daily, high low. This is all I want. I want monthly, weekly, daily, high low. So some people use, what weekly pivots and monthly pivots, they are irrelevant. Your chart will be filled with lines and you will be confused. See, if you, why I need daily, monthly, see, this is monthly pivot. Sorry, the yellow is weekly and this green is daily. Previous day low, previous day high. This is weekly. So this is important pivots, understand? And then I want RSI. The RSI setting should be 40 and 60. And then mark the 50 bar line. You need to mark the 50 bar line. If you go to sideline, you have 50, you can choose whatever lines you want, because you know above 60 RSI is in momentum, below 40 is in momentum. But change these settings, use these settings for RSI for option trading, and then mark this 50. I will tell you how we can use this. Hope you're able to see the screen. If you want, I can make it little dark so that you can see the RSI settings. All right. Now after this, I want a 20-day moving average. This should be simple enough, and I don't want you to use any other strategies I have discussed, not 50. If you want, you can add 5 EMA to measure the vertical, what do you call, momentum. But for now, to understand the strategy, please use this. All right. Now this is Friday. So let's assume how we could have planned for Friday. I'm going to make it little, minimized the chart so that you can watch it. Now this was Thursday. So Thursday later off, market closes, market sharply falls. All right. Tomorrow what happens, we don't know. We might be thinking downside because of the later up sharply falling and taking off the low. And from here, I also want you to draw the trend lines on RSI as well. Okay, what is the importance of this RSI? RSI is a momentum indicator. It measures the strength of the ongoing trend. Now it is going down, and here yesterday itself the strength diminished. It went sideways. And on Friday, current day, what happens? So this is the thing. Now we have one trend line, mark another trend line from yesterday's low. Now today market comes sharply down. The first candle, second candle, third candle, goes below this trend line, which is good because it broke previous day low, a very high probability trade to take a short. So if you know the pivot, the central pivot or the top of the CPR will be a stop loss, and you would be taking a short near the low or after the first candle break itself. However, whatever strategy you decide. Now our strategy is, I mean, our the purpose of this video is how we could have traded. Suppose if you have taken the trade after the low break, immediately this engulfing candle would have given you the first hint where you could have exited with the minimal loss, right? And then reversal candle, another candle. This is a very big candle comes. Now it broke, came up. Now forget about this trend line. It did not work. Now today's low, start marking these two lows. Yes, you're right. If you're thinking, yes, I am trying to capture the divergence on 5 minutes. So usually the divergence on the higher time frame are more valid, but we are trading on 5 minutes time frame, and this is valid on 5 minutes as well, right? If it's a divergence, it works. How you could capture this divergence is what I am focusing on. Okay, one, this trend line. This engulfing candle broke the downward trend line, giving you a hint there is some buying, and this is happening near yesterday's bottom, double bottom. Now this tries to break, but watch here. After the 5 minutes close, although market went down here, the RSI is showing you a positive divergence. This low is higher than this low, which means the momentum on the downside is getting weaker and weaker. There is a beautiful video on price action. Okay, decoding the price action video. If you watch, you will understand these candles. There are only 4 types of candles, right? Now here you get a reversal pin bar. This pin bar forming at the bottom is always a negative sign. It's not a strength. It is a weakness of sellers. And then you get this morning star kind of pattern. But however, when you combine this, the pattern will be somewhat like this, right? This is one big red head, this, and then this green is the wick. This is not sufficient enough. This is not a sufficient. I'm combining all these candles. Right, this is a little advanced concept. When you combine, you can identify a candle. Now watch, market goes up, this is also going up along with it, and market goes up, comes back, tests the previous day low. Now watch this one. When you combine, this is the same pattern. These 3 candle, it's the same pattern, but this particular candle is closing above this red bar. Here the red bar was a jumbo candle, and this was not the particular candle to take the trade. Still you could have taken a trade if you know how the morning star evening star works, by keeping the low of this as stop loss. But I would prefer this red bar. When in this formation, this red bar should be taken out with the green bar. Now here this red bar is taken out by this green bar, and watch, just watch this. This is your sign. After this, you're going to take an entry in this candle because it is breaking the 20-day moving average, and RSI momentum is above 50, showing you there's an increase in momentum. Now what will be your stop loss? Your stop loss will be below the previous day low, not this one, this candle low. And once you take the candle, market booms. So I have told you 20-day moving average above 20-day buying, below 20 days selling. You need to keep it as simple as it is. The market is above the upper CPR. Upper CPR belongs to buyers. Lower CPR belongs to sellers. Now here it comes, take support on 20-day moving average, market goes up. Understood? This is how you need to trade. Now from tomorrow, what should be your trading strategy? Now you will be drawing the trend line on RSI on here to understand where it breaks. And we have one trend line from here going up, which has been already broken, right? This is being broken, so this is not valid. So we will keep only the current trend lines. Now this trade was in between pivots using 20-day moving average, which is going to trigger a buying signal in a downward trend. Prices are below CPR, taking support near previous day low. Understand this. I'm taking time so that you can understand the price action clearly and catch the signals along with RSI. Now watch this one. Okay, this day has not happened. Thursday has not happened. This is Wednesday. On Wednesday, we have sideways market. Before coming this, we want how Wednesday closed at the end of the day, right? Now, this is the peak we have. If you want, from this peak, we have 3 trend lines, right? Now watch this one. So I am trying to show you how you can identify current day's trend based on previous day close at the opening. Drag it. You can drag it. My main focus is not the trend line breaking on the chart. My main focus is trend line breaking on the RSI to catch the divergence and the momentum. Now here market goes below S1, as I have told in the previous video. Below S1 is always smart money, below previous day low, below S1. This is where the initiative participants come, or the smart money comes, and price goes below. Is it below 20-day moving average? Yes. You cannot think, you know, positive when prices are below 20-day moving average. You need to keep this as a thumb rule. Now watch here. This is gone. Okay, price is down. So once market comes here, you booked your profit somewhere, forms double top, two tops, start drawing the trend line. See here, this is very important for you to capture. Hold on, guys. Now here, what is this? One bottom, one bottom. Prices are going upside. Yes, momentum is also decreasing on the short side, but and also the price has gone above the previous day trend line of RSI, indicating that downtrend is possibly over, but it is still not triggering the trading signal. Double top is very important, right? You need to understand all double top, double bottoms fails 65% of the time, especially on the first attempt. So this, when price come here, you need to anticipate it's failing. If it breaks, it's a downside, but it fails. See here, it came, went down, it broke. This was a double bottom which broke, but again it halted here, came down, it halted, going up. This is how you read it. But anyway, my point is where the signal has triggered. Where do you think signal has triggered? Market goes up, it is still below 40. Remember, below 40 is just momentum is downside is very high. Now watch this one. Here I lost around 10 points because I just rushed into the trade without the candle closing above the pivot, assuming this double top will hold. But when this red candle came, I realized the mistake and immediately exited, because it did not hold the 20-day moving average on this particular day. But what happens next? Now this candle breaks 20-day moving average as well as S2 pivot. This is the second trading signal when 20-day moving average is very closer to the S2, I mean any of the pivot, and the candle breaks a decent candle, not doji or half candles. I want a decent candle, even if it is small, possibly a full bodied red or green candles. It is breaking. This was the signal. Double bottom failure. This was a signal. And where is RSI? RSI has gone above 50. Your trade has signal. From here till next pivot or the high, depending upon that, you could enter. This is how I would have traded. And then market here, how would I have planned this? Okay, this is the trend line, right? This is one trend line, and this is one internal trend line, the more sharper trend line. Since we follow 20-day moving average on this particular day, prices has gone, you have made your money. Now prices are at the top, right? When the prices are at the top, again, it's the same strategy. You will have more time than you imagine. This is all around 50 minutes. This is all around 1 hour. So you have a lot of time to draw this and think through where trading is, or the direction of the market is heading. Okay, this trend line is broken, fair enough. And watch this one. Okay, prices are low. These two peaks are at the same level. Whenever a peak, RSI peak at same level, is also a divergence. This momentum is not about this. In fact, it is at the same level. This was the first peak. Here price have gone up. higher high, but these two peaks are at the same level. So you have a divergence caught there. All right. This is exactly how you need to catch the divergence in the naked eye. Now, once you caught the divergence, this trend line will continue whenever it forms. Now, after this trend line, where is your trade trigger? The trade has triggered here. When a red candle breaks the 20-day moving average and the S1 pivot, you will take the trade. What will be your stop loss? Above the candle, or if you're too scared, any green candle closing above S1 pivot on 5 minutes closing basis is your trade. This will be your reversal trade if you want to trade with the least stop loss. Stop loss is a must, remember. You could capture this 1:2. Now let's move ahead. This has been covered, right? This is again another range bound day. On this range bound day, last one, so that you guys can capture. So two strategies we have covered. One is how to use 20-day moving average and the RSI cross above 50 in between pivots. The second strategy is, which is a very high probability, when the 20-day moving average is very close to a pivot and the candle breaks the pivot. Previous example, I showed how the trend is reversing from the bottom when the 20-day moving average and the S2 was broke, and another trade near the S1 up from the top to down. So this is a very high probability. Now here, just showing you another example. This is one trade. Did we cover this one? Okay, yeah, we have covered this one. Okay, I'll go to this one. This day is not had materialized. It's a very sideway, right? Market is hovering around, very tough day to trade. Now, how did the market behave or closed in the previous day? Draw the trend line, do not hesitate, cover the lower of the peaks or whatever peaks you want. Okay, this is the peaks. This is one peak, this is one peak. All right, on this particular day, see here, you have a divergence already, double top divergence. So here market did not show what you call the momentum. So there is a gap up above. Okay, on this gap up, market breaks the trend line, comes down, and it is breaking the 20-day moving average. Is this a trade? Yes. Whenever a strong candle breaks 20-day moving average, you have to take the trade, go with the flow. Now here, I am more focused on how the current day is unraveling. Okay, this is your peak. So in trend line, you have a lot of varieties. The steep trend lines always gets broken very easily. Now draw this one. So once you enter, you made your money, market goes sideways. The central pivot is acting as a support, very strong, and the market is going sideways. So this is broken here. Now, if you consider these two peaks, okay, now these two peaks, why I would not like to consider is because it is between 40 and 60. Whenever price is stuck between 40 and 60, you need to anticipate it is sideways. And by thumb rule, whenever prices are between CPR, what it is a dead zone, no trading zone. Even if you have taken trade, see how many hours it has made you to wait, almost more than 2-3 hours, 2 hours. But still, when you see this lower low, this is not the right way of divergence because price is not below 40. But if you understand RSI, you know the momentum on the downside is not strong enough. It failed to sustain below 60 and it pulled back. Now we will wait. Market is sustaining above 50, above 50, above 50. You have the central pivot as your stop loss. As long as market is above 20, Now here, watch, this is where on this particular day, if at all, if you had taken a trade, one trade here, strong candle, it came down, 20 days holding, your stop loss has not hit. Another candle breaks, this one, your stop loss has hit here, understand? Now here, this 20-day moving average is curving up and the candle breaks 20-day and the upper CPR. Whom does the upper CPR belongs to? Tell me. Upper CPR always belongs to buyers. And do you see a pivot and 20-day moving average is broken? And these two range is broken with this, you could capture around 35, 40 points at the end. Now, once you book, your market is overlapping, going sideways. How do you know this can go down? It's a similar way. You can mark the peak, this peak and this green peak, wait for that peak to break. And when you mark this, you know, even with this peak, now this and this, if I remove this, the close of this green is above this, but still the momentum is low. So there is some kind of divergence. It's a caution. And if you know price action, the strong selling area will always act as strong selling area. So it was a caution for you to book the profit with this candle when this one failed. Now suppose if you want to take a counter trade, when this selling area and this jumbo candle broke the 20-day moving average, that is when you have to initiate the trade. Since this is a very big stop loss, your stop loss should be about 20-day moving average. This is exactly how we use trend line on RSI and chart and identify when you can take the trade. Now here, just to cover the RSI, not the cover up, that's not the right terminology. See, market broke here. If you draw the trend line, RSI will give you with the lowering momentum, the first signal that market is weak. And all you need to do is wait for the pivot or 20-day moving average to be broken, right? This itself is a big enough video, but if you want, you can watch the previous videos, understand the price action and use it for this. I mean, this method is how you plan your trades, scalping or long, whatever it is, using RSI, trend lines and trend lines on chart and using the 20-day moving average. And if you know price action, like wherever the previous buying or selling happened, I have shot a video on that, how to mark the effective price action levels. Or if you just dig through the videos, there's a 2 hours long video where it covers every aspect of price action trading related to standard pivots. And if you watch and learn that, you don't need any other training. So I took some time to explain this because this is a trading system in itself, and drawing the trend line on RSI and here takes some time. Like any other strategies, this particular system will tell you which side price is moving, and use this method effectively to make more money. Thank you all. Have a good day.